Welcome to the Nadex Binary Options Masters Series. During this brief video tutorial, we'll be discussing the strike prices and taking a look at what the various strike prices can mean for someone trading on Nadex. Binary options. Each market Nadex offers, such as equity indices, commodities, currencies, each underlying market has multiple binary timeframes as well as multiple strike prices within each time frame. The multiple strike prices allow traders to fine-tune risk-reward ratios based on what they believe the market will do. So let's take a look at what we could call a binary options chain. In this case, we're looking at the US 500, and we can see that we have multiple strike prices within, all at different bids and offers. So let's just take a look how this would view on a chart as a visualization. So here we have the underlying market. We can see that the price has been moving back and forth, and overlaid on top of this chart are the various binary strike prices from 1139 at the very bottom up to 1175 strike at the very top. Currently the market's trading slightly over 1154, and we can see, if we look towards the middle of the screen there, the bid offer of 54.50. So there are multiple strikes to choose from, depending on what we believe the market will do. If we believe that the market's going up, we could buy any of these strike prices at the offer. So 93.50 all the way up to $4. Now, what we want to look at is the probability. It will be up to you and your analysis to really determine which strike you're going to choose. But if we look just at the chain here, we could choose the very highest to buy the 1175 strike. We could buy that at $4. However, the probability, or what the market views as the probability of that happening, is very low. Or we could buy all the way at the bottom at 93.50. In this case, the probability of that event happening is substantially higher. However, we have a much different risk to reward ratio. If we're buying at 93.50, we have a much greater potential risk than we have reward. Conversely, if we think the market is going to go down, we could sell at the bid any of these binary strike prices. Again, though, if we believe the market's going to go down, we could sell at the $1.50 at all the way at the top at 1175. There's a very good chance that the market, if it just remains where it is, or at least doesn't go to 1175 or higher, may close and our sell may work out. However, if we look, or we're thinking that there is going to be a big move in the market, we may want to have a greater risk-reward ratio. So we could sell, if we go all the way to the bottom, at 90.50. In that case, the probability of the market going below that is less. However, we have a much greater risk to reward ratio at the outset of our binary option trade. We're going to cover risk reward in a subsequent video in much greater depth. But if you have any questions or would like additional information, please look us up at www.nadex.com or give us a call at 877-77-NADEX. Additionally, you can email customerservice@nadex.com.